My name is Tony Cameron with TLDR Accounting, and we focus on providing tax and accounting services to therapists in private practice. So we know the things that you have going on, we know the type of questions you have, and in turn, it lets us provide answers and more guidance with what you have going on in your practice. So today, we're going to dig into managing your money. Now, when you're in private practice, and a lot of times with clients that we deal with, this is the first time that they're not working a W-2 job. So you're in charge of managing your income coming in for your practice, your expenses for your practice, along with your personal expenses as well, and making sure everything is kept track of correctly, while at the same time still keeping in mind that you have to fund your own retirement, you have to cover your own health insurance, and then taxes. So taxes are a big part of it, and it's one of the first questions that I usually get is, should I be paying in taxes quarterly? How do I estimate my taxes when I'm a therapist and plan for them? Our first response to that is, number one, you need to have a process in place. So what does that mean? Set a reminder on your calendar the same time each month. You are going to go through your income and expenses for your therapy practice and then make any transfers that you need to. So that would be for things for taxes, retirement, and paying yourself. And the reason I do mention paying yourself is because you shouldn't be running any personal expenses through your business account. So step one is setting up the system. The biggest thing I can say is put a reoccurring calendar appointment within the first week of the month, and then you just get it all done then. So one of the things you should do is then you need to split up your monthly net income. And with that, we mean if you use QuickBooks, you pull your P&L and you have your net income. If you don't use QuickBooks, you got to add up all of your income for your therapy practice and all of your expenses. And so your income minus your expenses is your net income. That amount is now what you need to divide into different piles. One of those piles is going to be taxes. Another one, business savings. Then we have retirement, and then your take-home cash. And calculating those ratios does depend on your business. It can be a little bit too much, but the general rule of thumb is for taxes 22%, business savings 5%, and retirement 10%. And so after that, everything that's left, which should be about 63% of your net income, should be your take-home pay. Now, this works as long as you are not an S corporation. If you're an S corporation, this is a much more complex topic, and we're not covering that right now. So it's just you. You're a single member LLC or a PLLC if you're in Washington. And these are the ratios that work the best. And again, that's tax 22%, business savings 5%, retirement 10%, and then your take-home pay is about 63%. And the reason I mentioned business savings is because you're going to want to take a mental health day or take a 2-week vacation, and you're going to want to put some money away in your business savings to cover your expenses for when you're not going to have your income coming in. Now, if all this is seeming like a bit much, you can also follow along with our blog post or sign up for our Managing Your Money webinar, which we're going to be offering in July. Now, that's the practice side, right? You have your net income, you divide it up into 4 piles, and then you have an amount that is coming into your personal side. So all of that, of what we talked about before, was all in your business accounts. So business checking, business savings, you're good there. Now you have your take-home money, which is going into your personal side. So depending on where you are in your private practice journey, maybe you're just getting started, so your pay is a little low. Managing your private money is also important, and budgeting for your needs, wants, and desires. Obviously, things like needs are, your rent, your household expenses, childcare, any minimum debt payments you have, and making sure you allocate funds towards those is important. Same for your wants, which are, restaurants, movies, games, video games, that vacation I was talking about. And then desires are things that, are, big things like extra retirement savings, emergency fund, and then like additional debt payments if you need to get out of debt. And making sure you also divide that stack of money up into those 3 different categories. Normally it's 50% for needs, 30% for wants, and 20% for desires. And once that's all divided up, you could also be thinking like, Tony, there's not much left in the pot now, right? Part of that will depend on managing money coming from your practice to make sure you can increase your take-home pay so you do get to cover those wants and desires that you have in your personal life, which is outside of your practice life. Maybe you want to fund a 2-week vacation to Hawaii. How do you go about doing that? And that's one of the things we're going to be talking about in a couple of our videos, setting a target salary and discussing some of the things that'll help you get there in your practice. Now, if you're like, Tony, that was really, really quick, I'm not keeping up with you, you can read more in depth on our blog post, which is listed below. In addition, we are having this free webinar on managing your money. We're going to walk you through a really nice spreadsheet and show you how to apply this in your practice. So you can also sign up for that below.